Hello everybody. In this video, I'm going to be discussing openings such as true opens. I'm also be discussing NWOGs, NDOGs, how you can utilize openings in conjunction with those, cracks and correlation amongst those, so on and so forth. Okay. So please do me a huge favor. Get your notes. Go ahead and start writing a lot from this video. A lot of informative stuff is going to be mentioned in this video. So if you have any questions, feel free to ask me through private or through the general chat. So foundational information that I'm going to be covering in this video: what are the key openings, how to incorporate them, which ones to look for, cracks and correlations with them, right? This is a multi-part video. By multi-part, I don't mean part one, part two. I mean there's a lot of moving parts within this video that incorporate or that bounce off of one another, right? So it's better if you use all of them in conjunction with each other and implement them into your trading. So please pay very close attention. We're going to be going over a very important concept regarding true opens. So understand before utilizing what are openings, right? The ICT background. A lot of you guys who are looking to trade quarterly theory or who are just starting off may or may not know that openings derive a lot from ICT, right? Now, what do I mean by they derive a lot by ICT? I'm not specifying true openings. I'm specifying openings in general, prioritizing the opening price, such as 6 p.m. open, midnight open, 9:30 open, 10 a.m. open, 8:30 open, right? Now, the one thing that separates QT from all of these, right, is the way we utilize these openings and which openings we actually look at. So a lot of you guys, without even noticing, if you trade power of 3, you know that you're looking at opening price, right? You're looking for an open low high close or an open high low close. With QT, it's the same scenario, but the only thing you're doing is incorporating quarters to then tell you the true opening range. And I'm going to go ahead and show you guys exactly what I mean later on. So the implementation of how ICT or how QT is or how QT uses time openings is similar to the way ICT taught it. Okay, open low high close, open high low close. These are all things that you're supposed to be looking for after your true opening occurs, right? There is a certain criteria that QT traders must follow in order to implement them properly, right? So it's not just, again, like I mentioned, the hourly, the 30-minute, the 4-hour candle of the most volatile time periods in the day. So for example, a lot of people would look at the 2 p.m. 4-hour candle when Powell's talking, or the 2 p.m. 1-hour candle. They'll look at the 9:30 30-minute candle. They'll look at the 10 a.m. 4-hour candle, right? Because the bulk of the distribution is made at 10 a.m. or in that 10 a.m. 4-hour candle. So these are all things that you guys must understand. That is a little bit different with quarterly theory than what it is with ICT and his concepts, right? You're utilizing the openings, but I'm going to show you guys how to do it right now. So understanding true opens, right? So in short, a bullet point of all the true openings that exist. I mean, there's a few more that are in the higher time frame that I'm not implementing because I don't feel the necessity to go ahead and do that, since you guys are going to be day trading and not swing trading for weeks upon weeks. And essentially a rule of thumb for you guys who might be confused about this. Look, it's very, very simple. When you're looking at your true openings, right, think of Q2's opening price. So in terms of AMD X, right, the first cycle, its purpose is to accumulate. Right? The first quarter's purpose is to accumulate, right? The second quarter's purpose is to manipulate, right? Now, manipulation and distribution are pretty much the same shit. Now, what do I mean by that? When you terminate your manipulation, you are starting your distribution. From the very top of that, from the very top or the very bottom of that manipulation, you're basically hosting your distribution, right? So we're going to include the distribution within that manipulation, right? So if Q2's purpose is to manipulate, what are you going to be doing to go ahead and find the high or the low of the range? Super simple. You're going to use your true openings to identify. So a lot of you guys will be using, okay, the 4 hour candle open, I'm going to look for true or 4 hour candle opening, manipulation lower, and then pump up higher. Well, this is a similar way to do it, but with quarters. You're looking for that for that quarter range, for let's say the daily cycle quarter, for example, right? Or the daily cycle from 6 p.m. to 12 a.m., 12 a.m. to 6 a.m., 6 a.m. to 12 p.m., 12 p.m. to 6 p.m., right? Those 4 quarters, Q2's opening price, you're looking for a cracking correlation. Let's say you want to be bullish under the true opening, right? So true month opening is basically the Q2 opening price, which is basically the second week of the month, right? So you're looking at the second Sunday of the month, right? True week open is Q2's opening for the entire week. So it's not going to be Monday's opening price. It's going to be, which is 6 p.m. on Sunday. It's going to be Tuesday's opening price, which is 6 p.m. on Monday, right? So 6 p.m. Monday is a Tuesday opening candle, right? That's going to be your true week open, right? Then you have true day open. Now, true day open happens to overlap with midnight open. So true day open is basically Q2's opening for the daily cycle, which is the daily cycles from 6 p.m. to 12 a.m. That's the first quarter. Then 12 a.m. to 6 a.m., which is Q2, right? So Q2's opening price is true day open, and then true session open is Q2 opening price for the second 90-minute cycle of the current range you're looking at. So for example, if you're looking at New York, which by the way, I'm going to put this for you guys. If you're looking at New York, right, there's a lot of moving parts within New York. Q2's opening, right, 7:30, which is about an hour right before 8:30. Gives you some type of breathing room to understand premium and discount going into New York AM session if there's 8:30 news, or for market open, right? When it comes to true day open, the only similarity that there is to QT is, the true day open is a midnight opening price, which is what ICT mentions as the initiation of the IPTA, right? So TDO is pretty much the primary thing you're going to be looking for, right? With your intraday trading, right? When you guys are looking at swings, you'd be incorporating true week, true month, so on and so forth, right? So reference. Opens should be used as a reference in price, right? These are just a few ways that they mentioned to utilize openings, right? And I'm going to show you guys right now, right? When you are above true X open, you look for sell. And when you are below true X open, you look for buys. Now, I put X because X can be true week, true day, true month, all depending on exactly the scenario you're looking at, right? But if you incorporate these with NWOGs and NDOGs, then you're looking at tops and bottom of ranges. And not just one or two, of the whole fucking range. Like, you will probably catch the top or bottom of an expansion candle or of the move using true day opens, true week opens in conjunction with NDOGs and NWOGs, right? Basically, higher probability reference for price, then go ahead and reverse. Now, does this mean every single time we have sequential SMT and it's above a true day open and it's into an NWOG that it's going to give you a top? Majority of the time it will, right? But it doesn't mean that it's going to give you a top every single fucking time. You need to go ahead and be worried and be aware of where price is going, right? You're going to reference true day and true week openings within your trading every single day. So it's best you incorporate stuff like this to go ahead and assist you in getting analysis, right? When looking for sequential SMT, check and see if you are above or below any true opens. Check as well if one asset is above and if the others or other, looking at ES primarily, is not, right? So wicks and closures count, right? If you have one asset that is wicking above true day open and takes out a high and creates sequential SMT and the other asset's failing to close above it, look for shorts, right? Or if you're anticipating that to be the high of the day, look for a turtle soup of that previous quarter high or the previous cycle high and then short that shit, right? There's a bunch of different ways you can be doing this, right? So example here. Here you have a 15-minute chart, right? You have NQ in the middle, ES on the left, YM on the right. What do you have? Daily cycle sequential SMT under true day open alongside with doubling as you can see, we end up taking out Q1's low in Q3, and then a reversal back up to buy side. Now, I'm pretty sure if I would have flipped on true day opens, or sorry, NWOGs or NDOGs, this probably would have lined up with something. You look for expansion back down lower, create a sequential SMT, and then look for a long within this range and then catch the top, right? Or catch the bottom. NQ closed under true day open and ESYM failed to trade under it, right? Notice how ES tapped it perfectly and sent it, and YM wicked under it, failed to close, and then pumped up back up higher. These are all examples that you guys can utilize for going ahead and identifying true day opens or true week opens, right? Whatever you guys want. Now I'm going to show you guys an example of incorporating this, right, with your other stuff. So, for example, here we have, as I mentioned before, here we have NQ, right? We create weekly cycle at the highs with NQ here. And then what do? Expand lower. We have true day open here at 12:15. We're officially under true day open on every single asset, right? Now, referencing true week open, right? If you're looking for true week open, right? Or if you're looking at true week open, what do we have here? Internal low resting right above true week open alongside with this internal low resting right above it. You flip on your NDOG and what do you have? You have here price tap true week open, right? Now, of course, it matters because ideally what you want to see is price reference the true week open and the NDOG simultaneously, right? A lot of the times you'll get faked out, right? So for example, if true week open was like around here and we would have wicked under it and tapped into this NDOG, I would have looked for buys up. But since we didn't do that, you can't really reference that, right? What you should be doing is waiting for price to trade under that true week open and then look for long. So NDOG happens to be at the upper echelon of that true week open. You go down to the 1 minute and then you look for buys the second we go ahead and close under true week open, which is right here, and then buy program back up to buy side, right? It's super simple. It's not that hard to understand, right? So you're incorporating your NDOGs and NWOGs alongside or in conjunction with your true week opens, right? Or your true day opens. Another example of this would be here, right? I have an annotation here. You have daily cycle sequential SMT here. You have the NDOG from price from Tuesday, sequential SMT under true day open, and I'm pretty sure we are under true week open if I'm not mistaken. Yeah, under true day, under true week open, both. And then what does price do? It creates an SMR. Now, of course, in this case, the internal low that we were looking for terminus was right here, right? And there's no opening ranges attached to it. And that's fine because a lot of people think, oh no, we're not going ahead and going or tapping into an NDOG. Well, we are actually later on in our second stage distribution, right? But notice how YM fails to go under true day open, right? And notice how NQ and ES both do so, right? So with that in mind, what does price do? Come down, come back up, create our initial expansion up higher, create an order block, and then that order block has an internal low attached to it, inside an NDOG, below true day open. You then go to your lower time frame, being your 1 minute time frame. And then what do you have? Internal low with an order block, with an NDOG right here. The second price wicks under that low and we candle close under that, or candle close above it, or candle close in general. You look for buys all the way back up to your draw in liquidity, right? Which is your second stage distribution, which would have been initiated here and then sent you all the way higher to buy side, right? Super simple concept. All you guys should be utilizing it. If there's any questions you guys may possibly have, feel free to ask me or shoot me a DM. All right, catch you guys later.